Good afternoon, traders. This is Christian from Trade Trade Group, and this is your end of day market recap for Thursday, March 14th. Risk disclaimer in front of you. Everything that we're going through here is for information purposes only, not giving out any advice or recommendations. Just quick announcement. If you did not receive the video, I got a couple questions about, hey, how come, where's the video, the end of day video? We're only going to be doing those probably 1 to 2 days a week publicly. I will do one tomorrow because I like to do an end of week wrap up. And I think that'll be good, especially with the price action that we're seeing in the market, this week, quadruple witching week or triple witching week. So I will do another free one tomorrow, but probably you'll only see one for me free, for once, maybe twice a week going forward. So how do you get access to the videos? Right? You could go right to basically Substack, right? So this is where they'll be. I don't charge a lot for this stuff, including everything else that you're going to get from your membership, right? Or you could just become a Tribeca Trade Group member. Okay, so quickly, that's just the answer to a couple of your questions from yesterday. Themes of the day. Well, we can start with this morning's economics reports, and I wish I could kind of sugarcoat this, right? I generally like to be a little bit more optimistic, but it's not easy. It's very tough to be positive after these numbers, and they're startling to me. When you look at the numbers that we saw the other day for the CPI report, right, which was what, 0.4, right, which you analyze that, right, and that's 4.8% annual inflation. That is super hot, right? And the Fed's target is 2%. So it's not even close to that. And Powell has even said, like, we don't need to necessarily get the rate down to 2%, but close to 2%. Well, that's not even in the ballpark. And then when you look at the PPI coming in 0.6%, that's just very hot, and it's concerning. It is concerning to see like where we are at this point with inflation, and and it ticking up again like this. Does it mean that we are just completely not out of the woods, right? And we've seen a couple of these from time to time, but this is too stubborn inflation. And I kind of go back to and here's where the there's still Fed fund futures are still implying rate cuts later in the year, or the possibility of rate cuts later in the year. And I get it. We're gonna get a lot more information before we get to June, which has a 54% chance of a cut, or July, which is a 54%, 47%. We don't know what kind of economics the retail sales report was weakening for the second month in a row. So, bad data in terms of, or weak data in terms of retail sales. And so again, like, we don't know what kind of situation we're going to be in a few months with more information. But I just think it's going to be very difficult for that inflation number to continue to go down, when the other side of this, right, it's not just about monetary policy and what the Fed is doing, but it's also, as I've talked about in many of these videos, it's also, the other part of it is fiscal, right? And if you read just any book on economics 101, right, that there's monetary policy and there's fiscal policy, and it is what it is. I hate to talk about politics. I don't like to talk about politics at all. When we're talking about trading and investing and so forth, but these things definitely come into play, so you have to address them. But yes, we're in an election year, so normally I would think, like, if we were not in an election year, the Fed would be coming out and saying, hey, we're going to need to raise interest rates, maybe once, twice, whatever, not let alone cut interest rates, right? But that's not even the situation, right? And people have questioned this over the last couple of months. They're like, I don't get it, right? How is the market still going higher, right, when when the Fed hasn't cut interest rates, and they're still at a target rate of 5.5%? And that's because it's the other side. It's the fiscal side. They are running a huge deficit, right? And they're doing whatever it takes, I think, to stay in office, right? So I don't think that's like, I don't think that's it's really going too far politically. I think everybody knows that, right? They're going to do everything that they can to try to stay in office, and that includes more stimulus, right? And more stimulus, you could read several studies on this, right? But more economic stimulus, right? And more spending is going to create more inflation. So that's where we are, right? And we can't control any of these things. So let's talk more about the price action and what we can control. I just like to go over the environment that we're in and the overall macro landscape, because if we dig into that macro landscape, it was not pretty today for what the dollar did today, which was up. I think it finished up 0.5%. I'm looking somewhere else, and it's right in front of me. Right, up 0.5%, and then if I haven't really had to talk too much, and I've kind of skipped this in some videos, talking about what TLT is doing, what interest rates are doing. But on the long end of the curve, interest rates are moved higher significantly today, right? So that's going to be impactful, and particularly what I've been saying in these videos and in my trading room over the last couple of months is it goes right into the it really affects the small caps when you have a big move up in interest rates, right? And if you want to see the exact, because we're talking about TLT, right? And that's bond prices, right? And that moves inverse to rates. So I know some people have a tough time understanding that, but you could see the 10-year went up 10 basis points today, right? Right, and that means the price of TLT is going down. So that's concerning, right? So and you're going to see these knee-jerk reactions, especially in things like the small caps. All right, so let's talk about the price action. Breath was also very ugly today. There was a big MOC, big buy imbalance today, but again, the market is really kind of getting whippy, and it's been like that all week long, because this is a very not only data intensive week, but it's a movement intensive week with now it's basically triple witching. I call it quadruple witching still, because most people don't include index rebalancing, which is the biggest part of it in my opinion, because there's a lot of shifting that's going on in the indices, right? That will conclude tomorrow on the close, right? And then we can go on to other things. But there's often changes of direction that we see out of quadruple witching. So I think that is something to kind of be mindful of. When we look at the 1-hour chart of the S&P, right, again, this has been whippy all week long, up, down, up, down, up, down. So the market is really, kind of looking for a direction here, but ultimately just not there yet in terms of establishing a direction. And we saved, I would say that the bulls kind of saved grace here right at the end of the day, getting back above the value area. And notice where we found support earlier. So volume at price is just huge in terms of like providing an edge in terms of understanding where there's support, where there's understanding where there's resistance. And looking at TradingView, you could see I drew this trend line in earlier in the week, because really once we get to this upper band, price doesn't like it. And we've gotten rejected there several times going back to Friday. And by the way, we did get rejected again. If you look at where we had issues with, it was Friday's high, right? So regular traditional resistance helps as well, in addition to the value area. So that's where we are in terms of the S&P. Now the Qs. The Qs did hold both the top of value and the 20-day moving average, but this is starting to look a bit more suspect, right? Because we did not make a new high here, and since then we've been kind of trending a little bit lower. So for now, like, you've got a consolidation in here, and I would be very mindful about a change in direction that is coming here, because we've also stayed inside the value area, right? So like I've said, and I think I said in yesterday's video, one of the hardest things to do right now with this market is to kind of just sit and not do much while the market is figuring out the direction. And then when there is a direction established, making adjustments. I was talking about that earlier in the trading room, right? I'm mostly a swing trader. That's mainly what I try to do. But you have to understand, like, making adjustments as a swing trader is very important, especially when you're following trends, which is also what I mainly do. Is I'm a trend trader. So I make adjustments. We break a trend, right? I reduce risk, right? As we start to see more expansionary things, right? Breadth expansion, more new highs, less new lows, right? I will take on more risk, right? Because that's a very robust market. Well, what did the market tell us? One of the things that I've been talking about a lot recently is that we've continued to see more new 4-week highs in the S&P versus new 4-week new lows. So really quick, you'll see that the 4-week new highs in the S&P, right, still outweighed the lows, but right, we're seeing a little bit of a pickup here, right? For the last couple of weeks, the new lows have stayed in the single digits. Like there's been 6, or there's been 8, or there's been, maybe a 12 in there, but certainly not 36. So this is something that I'll continue to keep an eye on, and I'll continue to publish on Substack every midday for you, so that it can kind of help spot either a divergence or just something kind of confirming, right? If we start to break lower and volatility starts to tick up again, right, and you start to see new lows outweigh the new highs, right, then that's confirming that what the price action is telling you, right? But we do tend to look for divergences too. Like for example, if the market is still going up and you're starting to see new highs contract and new lows expand, right, then you know that you've got a signal that basically something bad is, something is not good going on under the hood. All right, so that's the other thing to kind of pay attention to. I think overall commodities still look pretty good. I talked about a lot in yesterday's video about the move in copper and about some of the moves in the copper miners, SCCO, FCX, and so forth. I began to kind of look at as well some of the other spaces, and like for example, like what agriculture commodities are doing. Now, part of this is cocoa that's doing this, but of course this is an ETF that tracks futures contracts, and there's a little bit of everything, right, in this DBA. So I think one of the most interesting things are we going to see, it's been, we saw copper yesterday. We've seen energy do pretty well, right? XLE has been acting very well, right? Here's XLE, which is basically back very quickly back to those highs, right, from last year. And we'll see if the price can get there or get rejected, right? Another thing that I'm watching is what crude is doing here, right? And I think crude is going to have a pretty decent test, right at this. Let me see. I think my chart is not right here, but basically at 82. Oh, I might be adjusting here. Let's see. Yeah, it's basically right at 82 is where we've got some resistance for the year. So this was a nice little break higher, but now we've got the heavy lifting to do, right? Because that's the top of the value area. Right around 81.80 is your major resistance there in crude, right? Another area that I have my eye on is what agriculture names are doing. Right, there's a couple different ETFs. So first of all, the week is not over, but we did get this is starting to look like a rejection bar. And again, you could kind of see this a little bit better on the weekly too. So here's the weekly candle, right? And this would be interesting if this starts to turn and go higher, right? And that's 73.53, right? And this is the agriculture or agribusiness stock ETF, and this one is has a little bit more food names in it, like Tyson, right? So this is agriculture producers, right? This is also trying to break into its value area for the year. So different type of trade, right? Because mostly I look at names that are like breaking out of a value area. This might be breaking into the value area for the year. So a trend change from the lows might be changing. And the one name that I'm watching is which I did go long today. Maybe a little bit too early, but for now I'm watching this 51.76, and this is NTR. All right, and again I'm looking for a turn here in NTR. All right, guys, so I will leave it there. I think, the bottom line is if you're getting whipped around this week, right? So first of all, that is generally a quadruple witching week. Price action will do that, and it's tough price action during a quadruple witching week. So the main thing I try to do is just kind of get through these weeks and not get too frustrated. Like if you feel like you're getting worn out, don't be afraid to kind of take a little bit of time off, right? If you feel like you're getting kind of just whipped around a little bit, right? And these things will kind of straighten out one way or another, either further to the upside, right? Or they'll start to kind of reveal themselves into in terms of possible breaks to the downside. So I think there's going to be a lot more interesting price action to come once we get through tomorrow. All right, guys, and don't forget on Wednesday we do have the Fed meeting, and that's why we're also not hearing from the Fed right now, is because they're in a closed period. All right, guys, have a great night. See you tomorrow.